Hi, welcome to the Market Alert for Monday, the 22nd of December 2014. So this week's going to be slightly different because we've got the run up to Christmas, but I can let you know there'll be another Market Alert tomorrow, that's for sure. As far as Friday's concerned, which is Boxing Day in the UK, the US doesn't celebrate this, and at the moment I don't know if the markets are open or not for Friday. However, that said, it wouldn't be a good day to trade anyway because obviously most of the world will still be celebrating the festive season. But we'll see tomorrow, see if we can get further information on this. Now, with regards to Friday, we've got the market trading sideways, and then we see prices trading through the previous day's high and close as well. Now, these two pivot points here are very interesting lines as well, so I'm just going to remove these for a second. And underneath the close there, the high, you can see that we have a psychological level of 17,800. The market then trades straight down to 17,750 before finding support. You can see the buying coming into the market. Again, the power of these psychological levels is quite something. The market trades up to the resistance at the left where the selling came in just before the open. You then see the market sitting on the 17,800 level. We see the market closing back and forth. It's like a magnet to it. Eventually the market breaks and we see the market trading back down towards the 17,750 level there before we get a triple X buy signal. This signal is filled. We see the market trading up to the scalp target, which is 17,802. The market fails to close at this. However, the market comes back, sits on the entry price there, sitting around a break even, and eventually moves back to the upside and gets through the 17,800 level there. You can see there's a bit of potential weakness. The market comes back and again just sits on this psychological level. So at this point you can either consider taking the 20 points off the table if that's your trading style. If you want to trail, of course, we eventually see the market then drive and push to the upside, which then gives us the opportunity to start trailing the stop using the rising lows. The first rising low is here. We have a low of 17,809 in this bar. The stop is at 17,808, and as we said, use the next odd number below to place a stop, so at 17,807. This trade remains intact, and you can see all the way up here that the rising lows continue. The market drives through with professional buying at the 17,850 level, and eventually on this rising low the market comes back to the 17,850 level, and thereby giving a 70-point potential profit on this trade. The market then drives back through the psychological 17,850, and then we see a sell signal. This comes in quite late on in the session, and it's one that I personally wouldn't take, but those that would have done, again you can see there's a 20-point profit there. It says down to this level, of course, but at this time we are at 2105. The market has closed. So again, it's 8:35. It's not one that I took. It was too late in the session for me, but I know there are some of you out there that will trade down to the wire and get out in the last 5 minutes or so. And if you did and had have traded this, then there was still another 20 points available on the table there. So Friday, a very nice day, very comfortable day and easy day to trade as the market eventually found its direction again. With the psychological levels, you can see precisely how and where the market was likely to trade to there. In the daily charts, again, you can just see the market's sideways there. We've got Friday's bar here, bit of overnight session for the early hours of Sunday, Monday morning, and now into the official electronic session. We can see that the market is starting to move back to the upside. And again, there'll be no surprise there. Let me just put a few lines on the chart for you. We're already through the 76%. We've got 17,898. And I wouldn't be surprised this week, before the end of and close of the year-end trade, even if it's next week when most of the world will still be ignoring the markets, that we see the 18,000 target actually hit. Again, I always clarify that by just saying that as long as there's no geopolitical event that will force the market, but they want this market up, there's no doubts about that. It should in theory be moving to the downside now the Fed has stopped the bond buying program, so it's going up on fresh air, which we can see here as well. We see a lot of buying in this market when prices are moved down. Who it is, I don't know, but there's some serious money coming into the market, holding the market and then moving it back up, and you can see it goes up on fresh air. The selling comes in, but then it's soon bought back, and then prices are moved back to the upside there. And this is what we're seeing once again, the same repeatable pattern that we've seen since March of 2009. For me, my money's on 18,000 before the year-end close for the financial markets. In the news, all we have today is existing home sales. It's going to be a bit patchy this week. This is at 3 p.m. Medium impact news item, forecast to come out more or less the same as the previous. Talking of the 18,000 figure, another reason I say this is if you have a look at the implied volatility, we went from 1461 1461 on Friday down to 12.36. So we're seeing there a big drop off in the implied volatility. Why? I don't know, because it's a very interesting picture there. We did have the rollover to the March futures on Friday as well, but that's a big drop off in the implied volatility. It fell off a cliff on Friday, and again I would expect the market to go on to make a new record high before the end of the financial the end of this year. 11.96 for the historical volatility there, coming back to crossover the implied volatility that we've seen drop on Friday there. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert, and say the market should start to come a bit thinner as we go through the week. We'll see how today pans out and tomorrow before making a decision, but certainly I will be back during the Christmas and New Year. Normally I wouldn't, but this year I'm going to stay at my post so that I can keep you up to speed. If you're interested and there's any sort of boredom during the Christmas period, you can be kept up to speed on what's going on in the markets as well. Right, see you in the next edition. As ever, thank you for your support, and thanks for watching. See you in the next one.